Good afternoon, Quasar Markets Live. I have a very special one, a friend of mine, and somebody everybody loves. It's Ralph Acampora, the godfather of technical analysis. And when I talk about charts, there's no better person to talk about charts than Ralph himself. So, Ralph, how are you, man?
Fine, Steve. Thanks for inviting me. This is going to be fun.
I love it, and you and I've known you a long time now. But let's get to it. Tell everybody a little bit about yourself and how you got started in charting, because you are a fixture, the stalwart on Wall Street. You've been doing charting even when they didn't even like charting. Can you believe that, Ralph? Let's get back to the beginnings and how did it all start out?
Yeah, it's a long story. Do you want to hear it? I I was studying. I was in the priesthood. I was studying. I was in the seminary studying for the Archdiocese of New York. I went home on Mother's Day in 1967, and my father handed me the keys to his brand new Buick. The car was 5 days old. He said, "Put a scratch on it, I'll kill you." Well, the car got totaled with me in it, and I wound up in a hospital, Steve. And I was 3 months in a body cast. I had to do spinal fusion. And it was there that my father's very good friend, Bill Downey, who got me this fabulous doctor. Uh, he was a Wall Street guy, and he would come almost every day to the hospital to see me. And whatever he was reading, he threw in the bed. And it was the Forbes, Fortune magazine, Wall Street Journal. And I said to him one day, I said, "Mr. D, I really enjoy reading this stuff." He says, "Oh, that's research. I'll get you a job." I was on crutches, and he takes me to Wall Street and to Smith Barney, which was a real research boutique at that time, was number one. And they said to me, "Oh, the frock priest, huh?" I said, "No, I didn't quite get that far." And the man patted me on the head. He said, "You go home, get an MBA, come back, and I'll give you a job." Well, I didn't really want to go back to school. And a couple of days later, I saw a little ad in the Wall Street Journal that said, "Junior analyst wanted, no experience necessary." I thought, man, that's my job. So I'm on my crutches. I went over for this job interview, and I was so excited about getting this job. I said, "I'll wash windows, I'll fix the floors. I'll do anything to get this job." And the man says, "Relax." He said, read this book over the weekend and come in Monday, you have a job." Well, that book changed my life. That was the Technical Analysis in the Stock Market by Edwards and McGee, the Bible and charting. And it was from there that I've been following charts every day since 1967. I love it.
Yeah, I mean, when you ask people to say, "Hey, you were going to be a priest," and to get a technical analysis, that's just completely the other way around, right? I mean,
Oh yeah, it's complete flip over. Yeah, you're absolutely right. But
and do you ever wish that you were in the priesthood at any point?
well, I try to help people out. You know, I give to schools and things like that. In fact, I'm going to Sao Paulo, Brazil, in March to give a presentation, and they wanted to give me some money. I said, "No, give me the money, and I want to give it to a local charity." So, you know, I try.
No, it's most definitely. All right, let's get to it. Not only are you the godfather of technical analysis, but you also teach technical analysis. You've done it for many, many years. Tell us a little bit
Yeah.
about why you got involved in being an educator, shall we say, technical analysis, and how was that accepted on Wall Street when you first started out?
Yeah. Well, again, I'll get back to 1967, 68. In those days, everything was done by hand, making these point and figure charts. Um, and I was a junior analyst at the New York Society of Security Analysts, where all the Wall Street analysts met. And they used to treat technicians, especially this young stuff, guys like me, they used to treat us like dirt. You know, you get in the back of the bus. Heck, we weren't even on the bus. And they said, "You're wasting your time with all this stuff." And around that period of time, in the early 90s, is when the efficient market hypothesis came out and random walk came out. So you had all the academics just dumping on technicians. And I was so fortunate to meet Alan Shaw, who was my mentor and one of my best friends. And he hired me. And it was there that Alan was teaching at the New York Institute of Finance, the School of Wall Street, where I met Alan. I was taking a class, and in 1970 he said, "Gee, you know, I can't." He used to teach two classes on Monday night, the basic class on technical analysis. On Tuesday night, it was the advanced class, and he said to me, he couldn't do both classes, so I raised my hand and said, "Alan, I'll teach the basic class if you'd like." And that started in 1970. And Alan and I literally taught the street. All those floor traders who never saw technical analysis up to that point were educated by us. And all the portfolio managers in the area, all the public that wanted to take the class. I'm very proud of that, Steve. I have no idea where the subject would be today if it wasn't for people like Alan and myself just teaching it. And
yeah, and one of the cool things about you is not only did you teach it, not only did you start it, but you also started a little project that I love. That's the CMT Association.
Oh yes, well, remember I was telling you I used to go to do all charts, point and figure charts by hand, but I had to go to a company called Morgan, Rogers and Roberts every morning at 8:00 and get my price reversal sheets. These people calculated how many stocks moved up and down the previous day. So on that receiving line, I met a young feisty Irishman by the name of Johnny Brooks. He was a couple of years younger than me, and we became the best of friends. And you know, he was also a member of the New York Society of Security Analysts. And you know, we were upset the way they treated us, but what really bothered us, we were jealous. We were jealous of the analysts because the drug analysts would meet once a month, and the auto analysts in Wall Street would meet once a month, and the chemical analysts. I mean, Johnny and I looked at each other, said, "Why don't technical analysts meet?" And we went back to our bosses. I went back to Alan Shaw. He went to Bob Farrell at Merrill Lynch, very famous guy, and they said to us, "If you young fellows want to start something, you got to go to the senior technicians and get their permission." It was very respectful in those days. And I went to a fellow by the name of Ralph Rotnam, and he went to Ken Walsh, and we talked to them, and they said, "Well, if you do this, you got to do it our way." Yes. I said, "Yes, sir." They said, "You have to have only market letter writers who write for their company on equities, no commodities." In those days, commodities were considered banditos, and they only wanted equity technicians. And number one. Number two, when you have a monthly meeting, you raise your hand politely and you ask questions. None of this tip and clip stuff, but my indicator is better than yours. None of that stuff. So Johnny and I said, "Yes, sir. Yes, sir." And that's how it started in 1970. And
yeah, I'm going to pull that up for everybody's seat, Ralph, while we're at it. And then go ahead, keep talking. I want to pull it up so everybody understands the CMT Association here.
Yeah. So in 1975, the school moved from Wall Street to 70 Pine Street. And that was where, when they were doing the floor plan for the new location, I said, "Can you make a little room for us?" He said, "What's that?" The head of the school said. I said, "A little library for this organization." And the original name of the organization was called the Market Technicians Association. It was a few years ago, I think 2017, that they changed the name to what we have today, the CMT, which really makes a lot of sense. The CMT starts for the Chartered Market Technician. That's the designation that we have. And Steve, I got to tell you, the most important date in my opinion, most important date in modern technical analysis history is Friday, December 17, 2004, when four of us went in front of 20 SEC lawyers and New York Stock Exchange lawyers and NASDAQ lawyers and FINRA lawyers. And we fought to defend technical analysis because in January of that year, the Sarbanes-Oxley law came out. Sarbanes-Oxley law said, all analysts of Wall Street had to have a CFA, and they just dumped, they just cut us out. And I got so upset. I pounded the table. I said, "We got to fight this thing." And we did. And I tell you, the greatest one line, my fellows, One fellow spoke 3 minutes on the history of technical analysis. The second gentleman spoke 3 minutes on the history of our organization. Third fellow spoke 3 minutes on the exam that we had, our CMT exam. And I had the last 5 minutes, and I was talking to these lawyers, and I said, if tomorrow morning you're being mandated to take the medical boards, and they're looking at me like I'm crazy. I said, assuming you could pass the medical boards, you wouldn't use that body of knowledge in your daily work as lawyers? And they said, yes. I said, well, that's what you're asking us to do. Please test us on our body of knowledge. And with that, one lawyer jumps up and says, oh, Ralphie, we see you on television. You're a nice guy. And he shoves a chart. Steve, he shoves a chart in my face, and I'm so nervous. I said, oh, my God, he's asking me a question. And he said, what's fact on this chart? And I looked at it. I said, well, price is fact. And his eyes got about this big, and I went like this to his stomach. And I said, and on his chest, I said, and earnings are an estimate. You restate earnings. You never restate this chart. He said, good answer. I said, you better believe it. And we ran out of that so fast.
And I think a lot of people don't realize that, Ralph, that, the people who are such technical analysis and charting now, that they probably wouldn't have the charts that we have today if it hasn't been for you and standing up for technical analysis.
Yeah, I'm glad you're saying that. I can't say that, but
I will totally say that. I also big people say that.
In all honesty, in all fairness, that was the most important date. And as I said, because it was 3 months later that the law of the land, the SEC, comes out and says there are officially two analysts in Wall Street. One's a fundamentalist who follows companies as a CFA, and the second analyst is a technician who follows stocks and has a CMT. It says it all there, Steve.
Absolutely.
That's it. And I like putting them together. I call that fusion analysis. You don't use one without the other. Come on, you got to see what the company's doing for a living and see if the chart's fine. That's all. That's research.
I like that fusion analysis. I'm going to post that up. Ralph Acampora, fusion analysis. I always call it thesis, right? Because I don't believe it's just charts. I don't believe it's just news. I believe it's a little bit of everything, right? We need to understand the fundamentals and then understand the charts behind it. I love that. I'm glad you're saying that.
Actually, it's 4 parts. I call it 4 parts. You start with economics. You got to have an economic overview. Low inflation, low interest rates, whatever you're going to. Then you go to the fundamentals to find out what industries do well in that economy. The third person you talk to is the quant. They don't talk to anybody. They just sit there in front of the computers and back test numbers. And they'll tell you if IBM is overvalued, undervalued in its entire history. Okay. And before you pull the trigger, the last person you talk to is a technician. That's fusion analysis, I call it. And we're the last guys to pull the trigger. Just do your homework and then find out if the stock's breaking out or is it an uptrend or downtrend,
I love that.
Every day.
I think a lot of people don't understand that, and I love that about it, because you, as a person who has been teaching, building, and creating technical analysis for 5 decades, when I look at charts today and people look at my charts and they're like, I don't understand it because it's just so many lines on it. We understand them. But what did you start out with, Ralph? If you were a new trader and you're teaching the class, what fundamental technical analysis overlays do you put on your charts to start out somewhere to get them into technical analysis?
First of all, price and volume. Okay. And look at a moving average, a 200-day, a 50-day, a 20-day. Nice and simple. Okay. Can't get any simpler than that. And then every computer picks that up and give you a graph. Then you start to look at, I got to tell you something. I listen to all these talking heads on television. Well, the Fibonacci numbers and this going in and drawing lines all over the place, and and then moving averages, and it's confusing to the public because they don't know any of this. So they're kind of saying to themselves, what's this guy talking about? And I say to them, keep it simple. Look at the chart, see what price is doing, see if the volume is confirming upside. You want more volume, of course. And then I would start to look at two indicators I like. They're simple. One's the MACD, moving average convergence divergence, and the RSI. That's relative to the stock, relative to itself. And you start to see whether they're overbought, little extended, if they're oversold, too depressed. And those are indications that maybe the stock is ready for a bottom or a rally, and vice versa. So that's how I would start. It would start very simple, Steve.
And that's very interesting to me because, yes, I have all kinds of lines on my charts, but you said MACD, it's on my chart. You say RSI, it's on my chart. And I change my charts all the time to obviously because based on whether the volume is higher or adding different technical analysis, but it's still basic stuff, right? It's still those things that we need to get down to basics, moving averages. So out of the moving averages, I've heard everything. I love 50, I love 200-day, I love 100-day moving averages. What moving average numbers do you like the best, Ralph?
I'm classic guy. I the 50 and 200-day are fine by me. I think they're
fine by you. Okay. And we'll post that too as well. Loves 50 and 200 DMA. Great. Love that.
A lot of people are talking about the 20-day, and I started only recently, maybe a year ago, looking at the 20-day, and it's pretty good. I kind of like it. A lot of people are using it, so if they're looking.
And what separates? Right, that's something I would ask you. What separates that? So you like those because that's what everybody's looking at? Is that to help you get a better understanding of psychology?
Yeah. The psychology. Yeah, from people that more and more people are looking at charts. I want to see what they're excited about. What turns them on, what turns them off. That's all.
And so, Ralph, you have, and we'll talk about it from what happened over the last 2 weeks. Silver, right?
Oh yeah.
This FOMO, this nonsense, craziness, chasing. How do you tell a new person to get rid of the emotion? What do you do to tell them about? Hey, you know what? Look at your charts, because at that point, Ralph, the charts really didn't mean much in silver at $121 an ounce, right?
Yeah, but when you start seeing them going straight up like this, I call it nosebleed territory. And if you look at the RSI in there, you would have seen it really overbought. I mean, I had phone calls, people saying, gee, maybe I should get into it. I said, I think you missed the boat for a while. Let's see what happens. And sure enough, the last couple of days, gold and silver got.
And I'm going to add that to the chart here. And you were saying, people were saying to you, hey, you're overbought. It's that parabolic move you were talking about, right?
Exactly. Oh yeah.
So when I look at I call it obviously Vincent called it the shoeshine boy theory, right? When the shoeshine boy tells you, hey, or the taxi driver talking to you about stocks, it's probably overdone, right? So let's talk about this. Yeah, let's talk about this one. So people have been asking about silver a lot lately, obviously, because I shorted it up there, and I'm now long because now the charts do actually matter to me. What is the first thing once you see this kind of bounce and this FOMO and all this? What is it next that you look at in a chart? If it's not 50-day, 200-day, because obviously those really don't matter much here. What is it? What's the next level of indicators that you're actually looking at?
I think you got a dotted line there. That's near-term support.
You got it. That's right.
That's what I'm looking for. I want to see some stabilization.
Yeah.
The fear is over. People are, they're not panicking anymore. Maybe it starts to stabilize. We go oversold. Maybe if it consolidates long enough, maybe you get a golden cross in the MACD. That's what I've been looking for. But first, I'd be looking for support and see if that support holds. And
how do you know when?
We're still above it, so we got a little bit ways to go.
And how do you know when resistance becomes support and support becomes resistance? What sets those lines for you?
Yeah, well, it's a matter of testing. I mean, I can't say it's definitely going to hold. There's definitely going to be resistance and stop any kind of rally. I'm a show me kind of guy. I'll sit there and I'll wait and I'll be patient and it'll happen. When it happens, you'll see it consolidate. Right now,
And
I see further weakness near term. That's the way I interpret that picture.
okay, yeah, I love it. And so, new traders that had that emotion. Were you always not emotional? Was it the fact you were in the priesthood that kept the emotion at bay, or
No,
yeah, okay.
no, I pray a lot.
I think I'm the only one praise. I love this. Yeah.
No. What was the question again?
Well, I think that when you look at new traders today, right, that with
Yeah,
new products like zero DTEs, and
yeah,
they're now getting into futures, which I said they would, or margins are way bigger. Banks are putting out more margin money out there to make money. How do you curb new traders' enthusiasm, FOMO, oversizing, all the things that we did when we started out trading? What do you tell them to start to chill that out a little bit?
again, I'm a very, very simple guy, and I just relax, look at the chart, all these other indicators and everything else. That's noise as far as I'm concerned. I just want to see price. Keep it simple.
Keep it simple with price. And so, when you're looking at the markets in general, I think one of the cool things I like about you is that you're also in the sector rotation. You know, kind of what's hot, what's coming up and hot, and so we know that metals have been very hot. What's the next sector that you're looking at, Ralph?
Well, the first week in January, a month ago, a big smile came on my face at the end of the day when the Dow Transports made a new all-time closing high. I'm an old timer, Steve. And Dow theory was very important to me years ago, and I still look at it. I don't know how many people look at it. I don't hear anybody talking about it, but I do.
I love that.
And boy, oh boy, I tell you, you saw them. In fact, today, as we're talking, the trainees at another all-time new high, stronger than the Dow. So you're talking about rotation. Boy, the airlines and the truckers and the, FedEx and these guys like that within that. But it's not just that, but that, as I said, put a big smile on my face because you finally had the confirmation of the secular bull market that's been in force for a while. And see, and the transportation average actually peaked in November of 2024. So all of 2025, the Dow was at making all-time new highs, and the trainee was not confirming. A little bit. I had a little bit of a concern there. I said, well, if we start the new year 2026 and we're still got this negative divergence, and the second year of president's term in office is, the history, usually the market has some kind of a pullback. And I was concerned about that, but my concern has been negated. I'm not worried as much, about that. I always worry a little bit. You got to worry a little bit. And and then when I look at, the consumer staples and, the rotation, financials, oh my heavens, they came on strong again. You can't have a bull market without financials. And energy was picking up, and that's the rotation, Steve, and it's ongoing.
And for those of you who don't know what Ralph is talking about, for those new traders out there, Dow Jones Transportation, the DJT, he's talking about that is a combination of companies that we know about, right? Like FedEx and UPS and trains and trucks and things that move things around. And the Dow theory says, hey, look, if they're moving things around, people are buying things, and that's part of that. And of course, it was telling us that the markets were moving higher, and was confirming, as he was telling you about that too.
I got to tell you a story. Maybe you're not aware of the history of our organization, the CMT organization. Now, I told you we started in 1970. You had Alan Shaw, you had Bob Farrell, and you had these senior technicians, these wonderful old men. And, they went to the Dow Jones people, and they said to the Dow Jones people, said, your railroad average, at the time it was called the railroad average, is not really representative of what's happening in the economy. And they looked at them, and they convinced the Dow Jones people to change the average to the transportation average. And now they included airlines and truckers and things like that. Up to that point, up to 1970, it was always railroads. That was the original theory when Dow put it together in the late 1800s. You had the biggest industry in the United States were railroads, because that they hauled everything. But 1970, that change came, and our organization did that. Isn't that cool? I don't think many people know that.
No, and I think we can make a short out of that. I like that a lot. All right, let's get to it, Ralph. One of the cool things that you do, and it's about yourself, and you love it. You still do it today. Is you have a barn? Is that right? Tell us a little bit about your barn. What's cool about your barn?
Well, my lovely wife Rosemary has a barn with her horses, and I have a barn with my stuff. I have a Corvette, a 1962 Corvette, and got to have a nice place to put it. And I have a lot of my all of my Wall Street stuff inside the barn, tacked to the walls. And I have my one of my major charts that I had, the famous war room in Wall Street when I was at Kidder Peabody in the 1980s. And the charts is 8 feet high, 22 feet long, and it had everything every day. And that's in the barn. And then one day I said to my wife in 2017, I said, Rosemary, it's my 50th anniversary on Wall Street, 67 to 2000. I'd like to hand paint the 50-year history of the Dow Jones Industrial Average on the north wall of the barn, because it was just plain, boring color. And she said, well, how are you going to do it if you got to bolt numbers on there? This doesn't make sense. I found a guy who made plastic labels. Wow. So I hand painted the entire history of the Dow. And while I was doing that, I said, gee, I wonder who was president at the time. So I put the president's names. I said, I wonder if we had a recession. Then I had this long red line, the extent or the duration of each recession that happened in my 50 years on Wall Street. And in 2017, when Dow was at 2,300, on its way to 2,400, a fellow said to me, the Wall Street Journal called, and they said, we hear you got the largest hand-painted chart of the Dow in history. They wanted to come out and take a picture of it and write an article. I said, wait. I said, when the Dow goes through 24,000, you can say the market went through the roof, which it did. I had to go up on the top of the roof to put the indication up there. And they came out. They waited for it. and then I don't know, about a year or so later, I said to my lovely wife, I said, Rosemary, I wonder if I went to the South Wall. I went on, and I did, and I calculated it goes all the way back to the Civil War. And then I hand painted everything. I got the history of gold and silver and interest rates, and and each year I have little green patches of events that happen, 3 or 4 events per year, and all the wars and everything else. And I had these beautiful signs made, Roaring 20s. In fact, Craig Johnson, a dear friend of ours, he said to me, gee, Ralph, you cornered the market, because I have the roaring 20s going up and then the crash going down at the corner of the building, so you can see the big rise and the big fall. Yeah, it's history.
It is. And, I think a lot of times people, when they're starting out, they're a little overwhelmed by how much you got to learn about the markets and stuff, and understandable. But I think in my case, and I think you're saying the same thing, is that history it doesn't always tell us exactly what's going to happen, but price tells you where the history was, and price tells you the history of the future, right?
Yes. History repeats. It doesn't repeat, it rhymes, as they say. Yeah. And I look at all that stuff. That's part of the fun of doing this, Is it sacrosanct? Does it happen exactly the same? No. Look at the 4-year cycles and things like that. You'll see history repeats.
So you've had a pretty good run as being a professor too, and a teacher too. Have you got any students that kind of stick out that you like? Oh, I like that student, and they went on to do
John
good.
Murphy was a student of mine.
Tell us a
Louis
little bit
Germano was a student of mine. Those are famous technicians. They came from the class. Isn't that cool?
It's very cool.
You know, I always tell everybody, the student is smarter than the teacher.
Not so sure about that one, but okay, I'll let them have that one.
Yeah.
And you know, when you look at your time on Wall Street, it's iconic, right? You've been featured on every single station, CNBC, CNN, FBN, back in the day, right? Did you have a place that you really, 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 really just loved working at, and you missed those days and times?
Oh, when I was at Prudential, it was wonderful. Alan Shaw was at my 10 years with Alan was God sent, and it was just he just inspired everything, you know. And you know, unfortunately, the man recently passed away, but But to answer your question, you know, where did I have my career really took off with Prudential. It was in 1995 that I wrote a report called Dow 7000. And at the time, the Dow was at 3,800. And everybody thought I was out of my mind. And the first evening dinner meeting of the organization, the technical organization in 1970, I'm sitting next to one of the oldest living technicians at the time, Ken Ward. And the man was like almost 80 years old. This is 1970. He lived through every bull and bear market in the 20th century and wrote about it. So I asked him, I said, Mr. Ward, sir, what was the most difficult market you have to deal with? And I said, oh, forgive me. That's the stupid question. It has to be the crash of 29. He said, no, young man, that wasn't the toughest. Don't get me wrong. We lost money, but the toughest market was the early 60s. I said, but it went up. He said, yes. And none of us believed it. Steve, I never forgot that. Never forgot what he said. And here we are 25 years later. And the cover of my report has the Dow going up 900 points and no real correction. I said, when have we ever seen this before? And you know what I did for my research? I went back to the New York Public Library. In those days, no computer. You can't go online and get the thing. And I had read through every Wall Street Journal from 1960 to 1966. I was coughing with all the dust in the. It took me a month to do that research in the library, and I found out that at that time, low inflation, low interest rates, and that was the theme of my report. And I have to. The chairman of Prudential. Wick Simmons was his name. You know, they would say, "Whoa, we got to be careful putting this thing out. You put the company at risk." This crazy report. Well, he allowed me to write it. He allowed me to print it, and the day it hit 7,000, I'm in the office. My feet aren't on the ground. Everybody's screaming. Television. Oh, we got to talk to you, and then. Wick calls me up and he said, yeah, you put us on the map. And I said to him, Wick, are you going to take care of your good guys? You know, I said, you know, I was saying I would like a salary increase. And he said, oh, don't worry, Wick, I take good care of you. He said, I wanted to get you a gift. I said, Wick, I've been wanting this gift for 30 years. He said, what's that? I said, a 1962 Roman red Corvette. He said, okay. And he hangs up the phone. It was a joke. Steve, I was joking. Guess what? A month later, that car is sitting in the lobby of our where there it is with the Dow.
There it is. I knew you were going to come up with it. I was like, I couldn't wait that red Corvette. And I think a lot of people don't realize that's a very, very good point, Ralph. That as you have wins in the market, a lot of times people don't take those wins and then go buy them something special, right? To remember that. But I'm going to play this real fast. I hope everybody can hear this out there.
After the Dow hit 7,000, Acampora issued yet another staggering forecast. He foretold of the Dow rising to 10,000. Again, Acampora's prophecy came to pass.
It was just a number, okay? These guys right here. The shot of Ralph Acampora, Prudential Securities.
And there you are at 10,000.
Yes,
Ralph. I mean, it's not like.
Can I tell you something? The first report, there was a fundamental reason that I found. But from 7,000 to 10,000, Steve, listen to this. There was no fundamentals. It was all technical. And what really expressed was the rotation. And that was the cover of that report. You see the utility average going nutso. And that's history. That's technical analysis at its best. Rotation.
And you've also
Rotation is the lifeline of every bull market. You can quote me on that.
got to write that one down. Rotation is the cornerstone of every bull market.
Every bull market. Yes.
All right. So you also have not just inspired generations of technical analysis people, but I think you've also got a pretty famous nephew too, as well, if I remember correctly.
Oh yeah, that guy, Jay Woods. Yeah. I don't know if I should tell the story. I embarrass him every time I tell the story.
I think we should tell it. I think everybody's going to say, heck yeah, tell that story.
You want me to tell the story?
Of course.
Jay Woods, when he was confirmed, I guess he was around 13 years old, I bought him 2 shares of IBM as a gift. But he had to plot the chart, make the high and low in price and the high and low in volume. And he lived in Philadelphia. His mom is my sister, and I lived in New York. And after about a year or two, I get a phone call, and it's only your sister can give you a hard time. She said, "You and your darn chart," she says. She's on the phone. She's yelling at me. I said, "What's going on?" She says, "My husband and Jay are arguing over this chart." I said, "Tell your husband the stuff that the kid's right. There was too much volume in IBM that week, and it caused a little distortion in the chart." And I said to her, I said, "Dress him up. I want to take him on the floor of the stock exchange." So the first day he ever got on the floor is when I brought him. And I brought him up to the specialist in IBM. And I said to the guy, I said, "You got to be nice to this young man. He's a shareholder." Oh, and with that, someone grabbed my arm and said, "Ralph, you got to come over here right away. We got to talk to you." I said, "Jay, don't move. I'll be right back." While I was gone, I was only gone, Steve, only gone a couple of minutes. Apparently, Jay takes his chart out and shows the specialist his chart of IBM. And the specialist pulls out his chart. He says, "Yeah, your uncle taught me too." By the time I got over to the specialist seat the station where they were, he had Jay standing on a stool. And I'm looking up at this kid and I'm saying, "Oh my God, what's going on?" And he yells out at Jay. He says, Tell these jerks what to do about with IBM, Jay." And the kid yells out, "Buy it." And he says, "Why?" He said, "That chart's going up."
The chart's going up. I love it.
You know what? 25 years later, who's the specialist in IBM? Jay Woods.
Jay Woods, that's right. And today he's at CNBC. Great guy. Love the guy to death. I'm I'm
very proud of him. He's doing a marvelous job, and he's great. Yes.
Absolutely. And I'm going to pull up, for those of you go back to it. We're talking about, that's right. We got his barn here, the Wall Street Journal. I'm going to pull it up just a little bit so I can see it just a little bit. But there's Ralph on the side of the barn putting that, drawing the pictures of the Dow.
And that's when it was 23,000 on its way to 24,000. I had to put my arm up over the roof and paint the bar.
And I think for those of you out there who would like to see that actual article, I'm going to post it right here. So in the comments section there, and we appreciate that, Straight Talk Texan, for reposting the stream. Ralph is a dear person here, dear friend, and a great resource. But I have to ask, Ralph. I mean, you've had this career on Wall Street for so long, and you are so revered in the CMT Association, and as our friend Tyler would say, we all stand on the backs and the shoulders of gods, in your case, people before us. But when you look at the new traders, the new technical analysis traders, and you think about them as a professor, and you think of them as all the time you've taught, and being, and what I always complain about for a lot of people, they don't really know, because they really weren't on the floor. They don't know what we do, Ralph. They're not part of it. They're just sitting behind a computer all day and trading. What do you think of this new I'll say sector rotation into this new type of trader, are they as knowledgeable as you guys being on the floor and doing this, or are they missing something?
No, I think they're in their own league. I mean, can I tell you, they're doing things I have no idea what they're doing today, and they're darn good at it. So no. I think that's the evolution, and you got to go with the flow. I mean, use all the techniques and all of the mechanics that you have today, all of the technology today. It's just marvelous. No,
yeah, when you think about computer trading and all this,
yeah.
I mean, I learned on graph paper and pen, right? How to technical analysis. Today it's so fast, right? Machines just make the charts for you, and you just look at it. Is there a specific software that you use that you like for technical analysis?
Stock charts.
Stock charts.
Yeah, I keep it simple, Steve. I don't get, I advise a family fund, and we have. It's just I'm not a day trader, but I'll sell something if I own it 4 or 5 months, 6 months. If it's up enough, So I'm short term that way, but not intraday. I don't do that. But no, the tools I have, I always have the CNBC on over my right shoulder there, listening to the noise and the information that's going on. You gotta. It's a fun.
What's the next evolution of technical analysis? What do you see coming down the pipe next? The future of technical analysis.
Wow, I think you're asking the wrong guy. I'm not up on all this technology. I'm still looking for my on and off switch. But I think this AI. It's creating all sorts of new, interesting things.
Yeah, when you look at the algo side of it, AI side of it, when you go back in technology wise, back in the 60s and 70s and 80s and 90s, the speed of which it's changed over time, it's speeding up, right? But when you look at it, was there a specific time when you're like, oh my gosh, this is really going to help technical analysis? Is there a time in like the 80s or 90s you're like, wow, this is really going to change technical analysis?
Oh, when the computers came out, absolutely.
Mm-hmm.
In the 80s, it became really, really impressive. And and I still had the chart when we were doing things by hand. People said, why are you still doing that? I said, I want to keep doing it. You get the feel, but the computer was just taking over everything else. And the team that I had that was doing the short-term trading for our clients, giving them advice, they were using computers, of course.
Of course.
And they could because they had the data. Remember, I was telling you in the beginning, I had to go to Morgan Rogers Roberts a day later, 24 hours later to get the price reversal of what happened the day before. That's how far behind. And then when the computer came out, and all of a sudden, God, I was like, wow, that's the greatest invention in the world.
Well, Ralph, it's always a pleasure as a friend, and of course, knowing as long as I have and the family. And I'll tell you, Ralph, I really appreciate this interview because it's I think a lot of people really need to know how they have their charts, right? And you are the godfather of technical analysis.
Yeah. Well, thank you, Steve. It's been a great run, and you know what I am so proud of? That you guys, you and your generation. And Tyler Wood and all those wonderful people at CMT, they have the same love, passion, and dedication for the subject we had in the 60s and 70s. And
well, I appreciate that.
Guys. And you know what? I say, and I've said this so many times to Tyler, and the mission is not over. You go to universities, there's only a handful of universities that actually have technical analysis on campus. These people have to be educated. That CMT program has got to go more, further. Globally, now we got it all over the place. I was at Dubai and a few months ago, and that was wonderful, just meeting everybody from around the world. And the organization is pulling it all together.
And I mean, look what you started. I mean,
Yes.
you think about technical analysis, you don't really think about the United States, but technical analysis started with Japanese rice farmers, right?
Yeah.
But you look at the CMT Association now, and all the things they've accomplished with Craig and with Tyler and moving the needle forward. You got to be very proud of them. Is there a place for those people that want to learn technical analysis? CMT Association. Do you have to go to college to be a technical analysis, or do you recommend school now? No?
No. You don't have to go to, well, I think everybody should go to school, but if you want to know about the subject, go get the CMT exam, get the certification. Yeah, that is so key. That is a blessing. I mean, and now it's all, I helped write the first exam, let me tell you. Yes. And it's completely different than today. Don't tell anybody. If I had to take that test today, I don't think I'd pass.
I love it. And for those of you who don't know, I posted it, CMT Association right there. You can click on the button right now. You can actually take that test. And if you look here, it says chart your course. You can start the program. Tells you a little bit about it. There's the brief history of the formation of the organization. Of course, Ralph will be there, and what you're going to learn, and the exam itself, and the curriculum, and love it. I love it, and I'm glad to be a part of it. I've been, as in my notes here, a major supporter of CMT Association, and Tyler Wood is on my board here at Quasar Market. So I love that too as well. So, all right, Ralph, again, it has been an absolute love and pleasure to have you on the show, and I look forward to seeing you regularly on our show, and maybe get some questions from the audience next time.
Okay. Thank you, Steve. It was a lot of fun.
From all of us here at Quasar Markets, we'll see you next time.
All right, sir.